Hey everyone, back with another video, and today let's talk about why the Apple stock split can make you money. So if you don't know, Apple had a 4-for-1 stock split, so it was previously trading at about $500 and now it is at $125 or $500 divided by 4, and this made it so the Apple stock was a lot cheaper and a lot more attainable for retail investors. The $500 price point was getting too expensive for many investors, but now that it's at a cheaper price, the logic goes that more people would be able to buy it and own shares. So I actually don't own any Apple stock in my Robinhood, but I do own contracts, and you can see them right here. The calls of the contract were also divided by 4. So here you can see that they are going over what exactly happened. I originally had 2 contracts. Now I have 8. And the strike price went from $500 to $125. Over here I had 2 contracts. Now 8. Strike price divided by 4, and same here. So these are 2 separate calls. These are actually called debit spreads, and this is actually just an individual call. So the reason this is a great opportunity for all of us is because now if we are trying to trade options, they are a lot more affordable. And now because I have multiple contracts, I don't have to go all in on one play. So what I mean by that is, originally, let's say I had this September 4th call at a strike price of $510. When I originally just had one contract, I would have to decide when I want to take profit, whether it's 50%, 100%, or 200%. I also would have to decide what my stop loss was. And once I made that decision, that's it. If I took profit at 50%, the play is over. If I took loss at 50%, the play is over. But now that I have 4 contracts, I can hedge my risk a lot better. I can take profit at 50%. I could take profit at 200% and then hold the rest of my options to let it ride it out and see how much more money I can make. In the long run, the more contracts you have, you're just able to make better plays. It's just like when you're playing poker. You don't want to put all of your chips in the middle of the table all the time. You want to see more hands. You want to see how things run. And the more contracts you have are the equivalent of being able to play more hands. Monday is going to be a really big day for me and a lot of other traders. The reason I bought these calls is because I'm very bullish on the stock. So I'm hoping and expecting that a lot of retail investors will want to get in on this new cheaper price, and that will help pump the stock up and also pump up the value of these calls. A lot of analysts also think that the benefit the stock would see from the split was already factored into the pre-split price. It's hard to say until Monday, but it's really exciting. And of course, we also have Tesla, originally at $2,000, now trading at a still unaffordable for most people, $443.40. But this is really cool. What I said about Apple also applies to Tesla. Now options are more affordable. Now a lot more plays are available to you. So I would encourage you to look into it. But again, always manage your risk. Always think about what you're willing to lose, because options are risky. Please give me a like so the YouTube and stock market algorithms can bless my calls, and we can experience together what happens when you are full bullish for a stock as exciting as Apple. Thanks again, and I'll see you all next time.